In the last video, I shared with you how I've been using an Excel tool I created to analyze stocks and identify promising investment opportunities. I also talked about how this tool helped me secure a job offer in the financial industry. Today, I'm excited to show you the upgraded version of my Excel tool and how it has evolved after gaining several months of work experience. As you will see, I've refined the layout and added some new features to enhance the analysis process. I've integrated more advanced financial ratios and indicators into the analysis. These new metrics provide a deeper insight into the financial health and potential growth of the companies I'm evaluating. This upgraded version allows me to make even more informed decisions when identifying promising stocks. One of the new features I've incorporated is a function that makes my workflow even more seamless. When I type in the stock ticker, the tool automatically opens the website from which I gather financial statements. This small but impactful addition saves me time and reduces manual effort. I've also incorporated a feature allowing me to specify whether the company in question operates as an S&L. An S&L, or Savings and Loan Association, is a financial institution primarily focused on providing savings accounts and mortgage loans, centered around real estate purposes. Presently, the stock I'm analyzing falls under the category of an S&L. I'm not a programmer yet, so I still need to copy the statements manually. You'll observe that all calculations are now automated, eliminating the need for manual input. Additionally, you can see the calculated trading price, which indicates the price at which the stock should ideally be traded based on these computations. I'd like to emphasize that I don't currently own the stock, and please note that this is not financial advice. Now let's move on to the exciting part. Using this Excel tool, I've identified a selection of companies that were successfully acquired by other companies, what we call exits. I believe that finding companies that successfully exit can offer valuable insights into the effectiveness of my analysis. I've created a presentation to sort analysis and acquisition dates, followed by photos. Let's get started. This is one of the earliest companies I analyzed using my method. Back in 2020, I made a decision to invest in the stock and sold it off after just a few months. Recently, I attempted to trace its performance only to discover that it's no longer publicly traded due to an acquisition. I recognize that many of my losses stemmed from a common theme: selling too early. This experience has taught me a crucial lesson. When you unearth a promising stock, the best course of action might be to hold on firmly and resist the allure of news and external pressures that might sway your decisions. If you discover a gem, trust in your analysis and exercise patience. As I've learned, market fluctuations and tempting news headlines can often lead to actions that aren't in your best interest. I remember spending a lot of time analyzing the chart of this stock. Its financials were truly remarkable, promising huge potential gains. However, instead of trusting the solid numbers before me, I delved into the world of chart analysis, attempting to predict the elusive future price movements. Before I made my decision, the company was acquired. While chart analysis has its benefits, trusting in the concrete financial metrics carries paramount significance. This stock holds a special place in my journey. It was the first one I ever bought that were purchased. Looking back, it was more than a financial event. It was a pivotal lesson that carved itself into my approach. I invested a modest $500 in the stock. While the investment amount may have been small, its significance was profound. The gains, considering the investment size, were not substantial, yet witnessing the moment of acquisition was a moment of pure amazement. Following significant successes, I conducted an experiment. I took out a small bank loan at 5% interest for a year, a substantial rate back then, and invested it in 10 companies. The reasoning was simple. If one stock would yield a 60% gain, a 5% interest payment seemed trivial. 2 out of the 10 companies were later acquired, creating a substantial portfolio shift. This experiment taught me that calculated risks and strategic decisions can yield transformative results. I captured the moment in a screenshot and shared it as a testament to the potential of calculated moves. Upon reviewing my initial analysis date, I realized it was illogical, as it came after the announcement date. Unfortunately, I couldn't locate the original file, so I've included a photo of my broker statement trade that captures the precise purchase date of the stock. Here you can view 6 of the 10 stocks that compose this portfolio. Can you guess which company is my next success story? This is my biggest success story. I bought more stocks of this company multiple times, leading to substantial gains. I even captured the chart showing when I bought more stocks. You can see that I purchased stocks of this company 3 times. Just like before, I couldn't find the original Excel file, so I used photos of my trades. The first trade was in December 2020 and the second in February 2021. This stock holds a unique place in my journey as it underwent a merger with another company. This was a novel experience for me. Instead of a significant upward leap, I found myself owning stocks of Chevron as a result of the merger. I didn't purchase the stock, again, because the chart looked unclear for me and I wasn't sure. I repeated the same mistake of under-evaluating the financial statements. The FTC blocked the acquisition due to concerns about competition suppression in the pharmaceutical sector, with a focus on preventing potential harm to drug competition. Despite this, efforts to finalize the deal persist. This company caught my attention after it had already been acquired. The promising financial figures intrigued me and prompted me to consider buying, but I realized that I had entered the scene too late. What's intriguing is that this occurred in 2022, a year marked by stock market challenges. Yet, opportunities like this still existed. I've shifted away from actively seeking such companies now, although it used to be an enjoyable pursuit. Investing significant funds in smaller companies is intimidating. The reality is, even if those stocks experience significant surges, my gains remain constrained due to the initial small investments. My focus has transitioned to constructing a steady passive income, as I explain in my course, which you can find in the link in the description. Although the process may be slower, the stability it offers is attractive. While I'm enthusiastic about sharing my success stories, it's important to note that failures have also been a part of the journey, demanding substantial time and constant vigilance, especially when investing in a range of smaller companies. My current strategy involves developing a monthly passive income stream, a concept I've detailed in the course. This approach provides consistent funds without the need for constant monitoring. This strategic allocation of funds brings a sense of certainty. You might be wondering about the connection between what I've just discussed and the photos I'm sharing of companies that achieved over 100,000% growth in 30 years. I want to emphasize that positioning oneself on the acquiring side of companies offers a wiser approach for remarkable returns. While the satisfaction of buying stocks is undeniable, it doesn't compare to the potential of long-term investing. Returns of 60 to 80% or even 200% are undoubtedly appealing. However, being on the acquiring side of companies offers even greater rewards. A single successful acquisition can have a life-altering impact. Even gains of 10,000% are substantial. This means that with a $10,000 investment, you could reach $1 million. I am currently investing also in this strategy, and actually, most of my investments are in less than 10 companies. I'll be discussing this approach extensively in the future as well. Yet, the allure of being active rather than waiting for a decade or more is understandable. This is why I'm dedicating effort to the passive income project. With a long-term investment approach, I allow companies to grow over time. However, constructing a passive income stream is a satisfying endeavor. Watching your income increase each month is rewarding, and it imparts valuable lessons about investing. You don't need to select just one strategy. You can apply a conservative long-term approach while also engaging in activities that boost your monthly income. This way, you will gain experience in both investing and money management.